Alright, ladies and gentlemen, in today's video I'm going to be going over how to use the unicorn model. I believe the unicorn model is very high precision accuracy trading model that ICT has taught about whenever he was teaching the 23 mentorship. So the unicorn model consists of first and foremost, a breaker. You need a breaker block, and then number two is a fair value gap. It doesn't matter, if it's a BISI or SAB, it doesn't matter what fair value gap, as long as it's a fair value gap or an imbalance and you have a breaker block. And that's all it is, it's a breaker block and a fair value gap. But I did say I was going to go a little bit more advanced, and I need to show you first the model, and then I'll go into a more advanced way of showing you not just the model itself, but how to use the model with other PD arrays and other stuff, so that's going to be a little bit more intriguing in my opinion. But first and foremost, let me know if y'all can spot a breaker block. It's going to be around here. So from right here, actually I'm going to put it right here and to right here. If you can see the breaker block, chart it up or just look at it, tell me that you see the breaker block. And if you don't, that is perfectly fine. If you know what a breaker block is, and all it is a low, high, lower low, and then you break that high again, and then you come and retrace it, and then eventually you rally. That is a breaker block. And then eventually a mitigation block is the opposite. It's a failed breaker. So you go up, you come back down, you don't break the low, and then you just rally back up, you can retrace and you go higher. That's all a mitigation block is. Spot it out for you right here. This is the breaker right here. We swept that low, we came back up, we closed above here. That would be your breaker block right here. And I know it went down a little bit further below it, but you can always measure, the mean threshold of these candles right here. You can see the middle point of that breaker block was respected. You can use, the wicks. It doesn't matter. But for me, I like personally using the precision, which is the bodies of the candles. And so how you measure it is you use the last, up close candles, or you can, if I don't have like consecutive up close candles like this or down close candles, I usually just use the whole breaker block. I use from low to high, or I go for like the lowest body and then the highest body of the breaker block. That's all I do. So that's how I usually measure it. But other than that, you can see the breaker got respected, and then we have a big fair value gap right here, and then eventually you can see we rallied all the way back up. As we were saying about the fair value gap in the breaker here, it wasn't as strong as you would expect it to be. You can add it to another arsenal, and that's what I usually do. I usually add this model and I combine it with the 22 model. It's pretty much the same thing, and then I combine it with my other model, my marker maker X model. That's my model that I use the most, the one that I'm the most familiar with, and the one that is letting me be very versatile. If I can see this form here, I'll take it with the marker maker X model. But the reason why this didn't work out was because, one, there's no higher time frame PD arrays aligning with this, because we don't have any higher time frame PD arrays. We don't know the higher time frame narrative or our bias. That's the main reason why we don't know the higher time frame narrative or the bias. That's why I don't recommend people just to trade on one time frame. Have another time frame. Try to trade 2 time frames, at least 3, just time frame pairing, but have multiple time frames to help you understand what you're looking for and why on certain time frames. And that's pretty much the reason why for number 1. All right, and number 2 is market condition. So the reason why it didn't move as fast is because look at the market condition, look at the economic calendar. That's something you always want to pay attention to no matter what. This week I saw we had NFP. So as soon as I saw we had NFP, I was like, all right, majority of the market is going to be in a range bound condition. And I knew, the PD arrays weren't going to get respected as I wanted them to. So that would mean, me for not to stay in the market. I would be very nimble with the trades I take during NFP week, during CPI, and during FOMC. During those market conditions, NFP to me is probably the worst one out of all those 3, and then it's CPI and then FOMC in my opinion. But during this week of NFP, I view the market conditions. I view Monday, I see how it is. I view Tuesday, I view Wednesday, Thursday, and then Friday, the NFP. And I view the market condition and I see, how the PD arrays are holding. How are they getting respected? What is my higher time frame bias and my narrative? So that is important. Wasn't strong as not having higher time narrative, of course. Using time elements, that is very important whenever you're trading this model. All right, this is another example here, but I'm gonna show you guys just a little bit more hindsight again too. The more advanced way of using unicorns, in my opinion. Doesn't always have to be with a fair value gap, and that's something I'm demonstrating here. Majority of the time, it should be though. If you want to get the most out of a trade, you want to get that speed, if you want to get the just strong distribution or expansion to your direction that you traded it, usually look for the fair value gaps in the breaker. Once it's overlapping, it's very powerful, especially after it swept liquidity and it just moved back up in your direction or moved back down. This is another example though. Here we have a breaker form. Breakers can look a little bit differently at times, but this is a breaker, of course. It isn't a mitigation block, it is a breaker, and then eventually we have a mitigation block, regular mitigation block, or a propulsion block if you want to call it that, since inside the breaker. I would name it a proportion block too. And you can see we chopped around, then we came back up for Asia session. Asia session to me, so here's a bearish unicorn model here. You can see here we had a high, low, and then we ran above that high, and we dropped down. We formed the SIBI on, during that price lag. We came back up, and then eventually we hit it, and then eventually we came back down, we chopped, and then eventually we dropped even further. Unicorn model is overlapping together. You gotta have a SIBI and a breaker block overlapping, and it's very powerful. I think this model is by far one of the most powerful models to give you a high win rate and a very good precision whenever you are trading.